Let's take a look at some information and charts on Aave for Brave New Coin. So Aave calls itself a liquidity protocol. In my head, it's in the lending and borrowing bucket. They have an increasing number of individual assets available for lending and borrowing, all at various APYs, APRs. This is sorted. Let's see if we sort by total borrowed, 316 million. So it's mostly stable coins. And if you compare these values, these lending and borrowing values to legacy, just like your bank's 1% or whatever that you get that's below inflation, stuff like this can become extremely attractive to low risk, high net worth individuals, which is why we are seeing most likely an explosion in stablecoin prints and mints to sort of satisfy these lending and borrowing rates across DeFi, across anywhere that can offer stuff like this, because that's very attractive to legacy players with a risk appetite enough to stomach the stablecoin volatility. Ideally, very little stablecoin volatility anymore, even with the Tether stuff in the rear view. USDC is certainly probably the most trusted, arguably. So nevertheless, stablecoins exploding, large part thanks to lending and borrowing stuff like Aave, like Maker, like Comp, all doing extremely well. Now you can lend and borrow directly through Aave on this app, or you can use any numerous apps to access this type of site. If we look at the total TVL in USD, it's kind of stagnated recently, and that makes sense. Again, if you look at price and what price has done with Aave versus TVL, not a perfect correlation or comparison by any means, but this stuff starts to line up. It makes a lot of sense. USD TVL has sort of flatlined. ETH TVL has increased since March, but overall just flat throughout March, and BTC TVL falling. And part of this is just the lending and borrowing rates for ETH versus BTC versus DAI. This stuff is sort of all over the place at any given time. So all in all, even with price volatility taken into account, TVL is kind of flat. And just to look at a different website, DeBank versus DeFi Pulse for that information, DeBank's even reporting 6.1 billion. I assume these are mutually exclusive as far as how they're calculated. So 6.1 billion versus DeFi Pulse is reported 5.88 billion. 6.1 billion TVL would put it just below Maker. Maker had been at the top. Compound had been near the top. This shuffled around recently, and Compound has exploded in TVL recently, even overtaking Maker, overtaking Uniswap. But it makes sense that a lending and borrowing DApp would be towards the top because of the stablecoin component, that removal of volatility risk while allowing for interest rates, basically, on this stuff. Curve is, for the most part, straight stablecoin liquidity, so it also makes sense why they're at the top as well. And if we compare all of these lending and borrowing issuers to each other, it's interesting because deposited and lending, if we look at MakerDAO in the orange, Compound in the green, and Aave in the purple, Compound is basically Aave and Maker combined as far as deposited in lending. Outstanding loans is greater, Compound is greater than both Aave and Maker, and Aave's at the back of the pack there between the three. So again, some of the fundamentals line up with price. When you look at Maker versus Aave versus Compound and are looking at what's going on with prices there, it makes sense to me that Compound is maybe doing better price-wise than Aave, just at a super basic level because of their borrowing and lending activity. And if we look at total market share of the outstanding loans, Aave sits around 15%, Maker 30%, and Compound at 56%. And this has waxed and waned for Aave. Aave's day in the sun was kind of all of 2020, and maybe less so 2021, whereas the other DeFi stuff has sort of blossomed kind of in the beginning of 2021 or late 2020. So a bit of a shifting dynamic between all of the lending and borrowing issuers, and obviously ETH fees really taking all of this stuff to task over what's even possible from a smaller capital perspective. ETH at this point is a rich person's playground because very, very few retail participants, sub $10,000 can really participate in a way that makes sense. If we look at the transaction counts for Aave, in the line here, average transaction values in the fill, again, transaction counts sort of peaked February 10 and then have dropped off extremely quickly throughout March and April. Average transaction values have stayed high, likely because you're seeing fewer smaller transactions. And some of this is ETH fees effect. Some of this is just rotation from Aave to Compound. You know, what's the flavor of the month? Lending and borrower, right? It used to be Maker. Now it's Compound. Aave was big throughout 2020 price-wise. Everybody was talking about Aave. So this stuff will wax and wane throughout time. I don't think any of these are going away anytime soon, but there's definitely going to be continued rotations as some get upgrades, others don't. Fees change on some of these lending and borrowers, others don't. NVT, inverse metric of economic utility, in the line here has risen substantially in late March, coming down recently in April. So this suggests that price in March was sort of overbought relative to on-chain activity, and it's coming back to reality recently in recent weeks. Again, with these active addresses, you're seeing this stuff come way down since mid-February. So if I'm bullish on the token in the near term, I want to see transactions increase. I want to see active addresses increase. I want to see market share get pulled away from Maker and Compound and into Aave. Looking at the Google Trends for Aave, which is a Finnish word for ghost, so it's not super clean on the Google Trends, as in it's not just crypto stuff, but this also is pretty in alignment with the on-chain data in that Google Trends peaked kind of the first week in February and have been falling off ever since. So if Aave picks up again, which I think it will based on the TA in the near term, I'd expect to see an increase in Google Trends as well into, throughout Q2. Certainly I expect Aave to at the very least retest all-time highs here. If we zoom way out and use the half-year MA multiplier, so the green here is the 183 MA, and the red line is 5 times the 183 MA, and the white is the midline between the two. And what this allows you to see is where price is in sort of a buy zone and a sell zone. You can backtest this and see, did it make sense in September 2019 to buy? Did it make sense in September 2018 to buy? Did it make sense in September 2020 to sell? Stuff like that. So it gives you a pretty decent picture, snipes the bottoms pretty well, and gives me confidence that going forward, this is a worthwhile metric to look at. So if you're just trading this, it has a buy zone around 215 or less. It has a sell zone at around 1100 and above. And since late 2019, these signals have been very tight, as in price hasn't spent much time above or below either of these. So it's a pretty decent signal from that regard. If we look at just the daily 5200, everything's been bullish since late 2019. Really one of the first DeFi coins to do anything. It was around. It was called Lend before Aave. So it was kind of an early DeFi project from that regard, but it was able to, on technicals, hold its bullishness since 2019, and it's held above the 200-day moving average for quite some time. And again, this is another buy zone territory at around 250. So for me, I'm always more comfortable buying a mean reversion target like 250 than necessarily breakout trading this at all-time highs. You certainly want to see like BTC and ETH, where you're seeing this extended consolidation period at all-time highs. People are indecisive, buyers and sellers, as far as what they want to do. That's what you want to see for me if I'm comfortable sort of sizing up on leverage at all-time highs. Otherwise, I'd be looking at stuff like this. Now we can zoom in and we can say, okay, what does the cloud look like on the daily? What did it look like at the end of 2020, where it had this cup and handle type thing, inverted head and shoulders type thing? Throw both of those out, just call it a bullish Kumo breakout, whatever you want to say. On the daily, the cloud was excellent at getting you in end of November at the latest, really. You could have entered at the Kumo breakout here in early November, but by late November, it said it's time to be long, even before it broke highs here. So a very similar picture now. We didn't even, we dipped below the cloud a little bit, but not much. Again, this is showing price above the cloud, and I'd be waiting for this bullish TK cross to take an effect to really solidify the long entry. But the cloud trend-wise still looks fine relative to price. There's also this inverted head and shoulders type of chart pattern where you basically get 3 lows that sit at some sort of horizontal or diagonal resistance, and just a very basic measurement of that gets you back to all-time highs around 550. If we look at this on the 4-hour, cloud is a bit noisier. Trend metrics get noisier if price is sideways. I mean, that's just always a given, but even still, it's holding above the cloud. So it's tipping you off early here that this still looks bullish, even in trend metricville, where this is a bit messy. So let's say you don't think it's a chart pattern, fine, trust the trend. If you don't think it's a trend, trust the chart pattern, whatever you want to do. Either way, no matter how you try to look at this, it's impossible to look super bearish. So in the near term, this quarter, I like 500, 550. And if we're looking at the MA multiplier again, I like, longer term, maybe Q3, Q4, I like 1100 plus, 4 digits really, by the end of the year, I think is very reasonable, should this continue, which I don't have any reason to believe it wouldn't in the near term. If we look at Aave BTC, bit of a different picture. The first thing I noticed is how close we are to this 200-day moving average. So back to my initial thought process about buying the mean reversion versus buying the breakout at all-time highs. I'm much more comfortable buying charts that look like this, right? Because it's testing support or has tested support. So I'd rather almost buy the knife catch down here than wait for it all the way up here. Just because of how strong it's been since 2019 above the 200-day moving average. Even though it did dip below pretty decently in 2020, this is definitely a place where I'd start buying personally, Aave against BTC. There is also a potential inverted head and shoulders. A lot of people are not going to like this. If you didn't like this version of the inverted head and shoulders, you're going to hate this version, right? It's not perfect, it's not pretty, but it's not there. You get 3 sort of lows at a very clear diagonal. So call it whatever you want, but I think it looks like a convincing enough reversal potential for me on top of this 200-day moving average touch to make sense. Let's say you're hyper conservative and hate all that stuff, then you're waiting for a bullish Kumo breakout above the cloud, which again, pointing to early 2021, sniped that long nicely. There was a long entry here that held nicely. There was a long entry here that pulled back, but eventually went again. So, it depends, I say all the time, your risk appetite, your leverage, your trading size, your time horizon, all this stuff takes into effect. A lot of newer traders like to focus on ultra low time frames, what's going to happen in the next 30 days. It's just so much easier to trade this stuff on a set it and forget it mentality. Like, look at this, right? It tapped the 200-day moving average. Just buy and hold it, right? like why are we even talking about what's happening in the next month, right? So all this stuff looks good to me. On the BTC pair, the ETH pair is nearly identical in that it's tapping the 200-day moving average, sort of just trailing off. It's got a uglier inverted head and shoulders even still. So trend metrics aren't in its favor based on the cloud. It has mean reverted. It depends on what you want to do here. But for me, this looks decent enough. Another strategy is to just start accumulating anything below the 200-day moving average, and then ideally by the time it's back above and trend metrics are bullish again, you're just done buying at that point. That's one way to look at it. And if you want to see how I'm trading BTC and ETH, you can check enzyme.finance. There's a link in the video description below. It's a non-custodial portfolio management tool, completely transparent. You can see AUM, trades, deposits, withdrawals, fees, all that stuff is in here. It's a really great way to prove what I'm doing and when I'm doing it. We will soon have a fully set up DeFi portfolio. We're just getting in the initial stages of adding the tokens and everything. Aave will definitely be a part of this basket. So if you're interested in any of that stuff, you can check it out. And if you have any questions, let me know in the comments below. Like, dislike, comment, share, subscribe. Happy trading.